I think the data on Friday on jobs was also super interesting. Yesterday's data on the services also, the prices paid was coming in higher. All the data is pointing that U.S. economy is running super hot. The labor market is tight. And the Fed is now increasingly pivoting the message from about the cuts which they made by Waller and Powell over the last few months about the core PCE last 3 to 6 months staying within the range, to now talking about productivity gains maybe will offset some of the labor market. Kashkari is also saying maybe the neutral rate is running higher, and that we are hence, I think on Sunday also Chairman Powell said basically we are not concerned about the labor market, and as long as inflation remains low, I think as if the data keeps coming hotter, they will have to at some point acknowledge that this may translate into prices and inflation moving as well. But at the moment they're relaxed about it. They said that, I think he literally said, if jobs weaken, we may cut faster. But if jobs remain tight, and that's great, as long as inflation remains low, that would imply that, as Mr. Kashkar is also saying, that maybe the neutral rate is running higher. So investments are strong in the US and they're picking up fast. I think some of these investments are actually not rate sensitive, especially AI data centers related, which are powering ahead. And these companies are very cash rich. So, yeah, I mean, I think US economy is super strong.
Not at this point, but if the messaging around the neutral rate having to be higher from here, doesn't that carry connotations that the cost of capital is going to be higher for a lot of companies, that we're not going to get the rate cuts that some might be anticipating this cycle?
Yes, and this translates back into equities or longer duration equities. And we have been in this cycle, in this point, like summer of last year, economy is running hotter, and Chairman Powell came with hawkish messages, and equities pulled back in August, September, October. And we could run into something like that problem again. But yes, higher cost of capital, and that will naturally translate into a lower multiple, and the equities have a higher multiple. We've discussed the Magnificent Seven like a month ago.
Well, let's pick up on that, Fawaz. Magnificent 5 or 6, I think, is your point today. 5.5. You give it. Well, let me just explain what Fawaz is saying, and then you'll carry on the detail. He's saying Tesla's out. He's saying Apple gets a half a point at the moment, and the other 5 get a full point as well. That's what you're saying, isn't it? So tell me about the Magnificent 5.5. There you go. That's the first time we've heard this coin.
Yes, I think I made that point last time as well, and I think the numbers are coming through on that as well. It's becoming...
Sorry, did you short Tesla? Because...
We are short Tesla, and Apple as well.
Right.
But the others we are long. And we're actually adding... as we're getting confirmation. So for something like NVIDIA, it directly benefits from an AI spend. So even if Apple is spending on AI or even Tesla or others, NVIDIA is the direct beneficiary in one sense because it's selling the hardware, and so is AMD. And then you have the guys who are selling the AI services, that's Microsoft, AWS, Azure. They are selling the services for others to run AI workloads on. Meta runs a lot of AI workloads on Microsoft's OpenAI and Azure. And then Google Cloud Platform. And then there are others who are using it. And Meta has actually done a really great job with...
Meta's done a great job of dropping its aspirations to do purely moonshots with its cash and actually think about the year of efficiency, which is, funny enough, turning into another year of efficiency. Can I just very briefly ask you, I am this hypothetical rich Swiss client today. Or not, as the case may be. I'm not just going to put my money in the Magnificent 5. Where else? I get it, you like them, valuation's a little bit scary, but they've got a great growth story. Where else is this hypothetical rich Swiss client going to put his money? What's the next trade?
So I believe the AI winners in picks and shovels are actually are in some sense a better bet because all of these large cap tech and more broadly the large mega cap companies in US are going to spend on AI workloads and AI infrastructure. So if you look beyond the Magnificent 5, so you exclude even NVIDIA, so then AMD is obviously going to be a beneficiary from this. But in US also, Micron and Broadcom and Arista Networks, and in Europe, ASML and etc. These guys are going to be winning. And in Asia, you have like Hynix and TSM. So these guys are, and there's a slew of companies, Disco in Japan. They are all winning.
Karen's got another question for you, but I should ask, do you own all of those companies?
That's right.
Thank you very much indeed. Just get disclosure out there.
So they are winning. And also, we mentioned obesity last time.
Oh, yeah, we go over it, yeah.
So Lilly and Novo, I mean, we're for some of our top positions.
Well, that's some great